Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we've been doing these roundtables. These are free mentoring roundtables, and we've been doing them for many years now. Coming up to 10 years, actually, and we just completed in May a milestone event, which is our 400th roundtable. So over 75,000 people have attended these sessions, and we publish all the recordings on our YouTube channel, 1M1M Roundtable. So please feel free to check that out. It's actually a great learning resource if you're trying to, do your early exploration through the entrepreneurship waters. The channel also has lots of other interesting content for you to learn from. Now, today's session, if you're live tweeting the show, please use hashtag 1M1M. And our Twitter handles are @1M1M and @Romana, and you can follow either. Again, we publish a lot of very interesting content through each of those channels. Now, this is a roundtable, it's not a broadcast, so we want you to participate as much as possible, and we believe you learn the most by participating. So these are the call-in instructions. We're not quite ready for call-in yet. We will put these back up later when we are ready. So line up your questions, dialogue in the public chat. Be sure to set your public chat to send to all participants. That way, everybody will be able to see your messages. Do not send me private messages. If you have technical issues, you can send private messages to Maureen, but not to me. We are going to start today's session with a conversation with Ravi Mohan from Shasta Ventures. Welcome, Ravi, to the show. Is Ravi's video audio clear?
Yeah, can you hear me?
Yes, we can hear you fine, and we can see you fine as well. Great.
Excellent.
So, Ravi, let's start by introducing our audience to you and to Shasta. Tell us a bit about your background, as well as as we are sitting in 2018 June, what is Shasta's investment focus?
Sure, absolutely. So I'm very fortunate to be a venture capitalist. I began my career building software. I did that at 3 different companies. I started off working with a large systems integration company, Anderson Consulting, now called Accenture. And since I've been in the technology industry for quite a while, over 20 years, I began writing mainframe programs for them. I then moved to a software company that ended up becoming Hyperion, and I was a pre-sales consultant for them with a new business intelligence product. And then I worked 3 to 4 years in India with my mother when we had a small software business building decision support systems. Our customers were large multinationals domiciled in India, as well as large Indian businesses. We also did work in the Far East, in Singapore, Indonesia, as well as had some customers in the U.S. After I finished that, I got my MBA, and through good fortune, I entered the venture business in 1996. And for the last 22 years, I've been a venture capitalist focused on software companies, SaaS companies, infrastructure companies whose customers are other enterprises. Shasta is a classic early stage West Coast-oriented venture firm. We have raised 5 funds, and we're currently investing out of our 5th fund, which is a $320 million fund. We invest across stages. We do seed investments, Series A, Series B, Series D, and sometimes, occasionally, we will do a growth investment. Our areas that we focus on are business-to-business software and software as a service, business-to-consumer services, and what we call emerging platforms, and that includes augmented reality, virtual reality, robotics, space, And so those new platforms are what we categorize as emerging platforms. We have 7 investment partners and a small staff.
So let me double-click down on a few things that you talked about. First and foremost, you said West Coast-oriented, but you also prefaced the introduction with your very deep background in India. So how does that play in your investment activities today? Are you looking at companies that are Silicon Valley headquartered or West Coast headquartered, but have a lot of India backend and so forth, or is it pure West Coast companies?
In terms of geography, we invest primarily in the West Coast, where the headquarters of the companies are, and that includes Seattle, Los Angeles, San Diego, the Bay Area. We also have made a series of investments in Austin, Texas, and a series of investments in New York City. The reason we are not able to invest beyond these geographies is primarily that we're not there enough to be able to work closely enough with the entrepreneurs that we back. In terms of India and having a back end in India, many of the companies that we are invested in have engineering, product, customer success operations in India. And so it's not a requirement that they have the back end in India. They could have it anywhere. They could have the back end in Silicon Valley, as far as we're concerned. But it's mostly the go-to-market team has to be in the geographies that I mentioned, as well as the senior leadership. Fair
enough. And just to complete that configuration question, so because of our activities being entirely global, we see nowadays companies everywhere. We see companies all over the United States. We see companies in Europe. We see companies in India, of course, and so forth. And many of them have aspirations of coming to Silicon Valley and set up their go-to-market operation. Maybe they do validation elsewhere, but they come to, go beyond the validation phase to the next, Series A, Series B in Silicon Valley. Is that something you're seeing? I'm sure you're seeing India, but are you also seeing Silicon Valley go-to-market, but backends, whether it's engineering, customer support, QA, et cetera, in other parts of the United States, in Europe, et cetera?
Very much so. I do think that the business has now become the business of creating technology startups that disrupt the status quo is a global business. Some of those markets that the companies get started on are aimed at overseas markets, and they're very successful. You can look at Baidu, and you can look at Tencent going after the Chinese market, look at Flipkart in India. Those are all fantastic companies. But at the same time, they're in business to business. You see companies get started in a variety of different geographies and then look to tap into the U.S. market and grow. There have been a number of Israeli companies that have been successful, primarily in the security space. There have been a number of Australian companies that have been successful. Atlassian is a good example. Canva actually is marketing in the U.S. market, but has even kept its go-to-market in Australia. You're starting to see some really interesting companies coming out of Europe. Algolia, for example, out of France, is a recent example in the search space. So we're seeing it more and more.
Yeah. And when you say seed stage or early stage, define that for us. What is your definition? Let's take B2B. What is your definition?
I mean, seed stage, early stages could be, as early or as an idea without a product. It could be as early as that. So we backed, or I'm on the board of a company called Lean Data, and I've known the entrepreneur for 20 years, and he and I discussed starting the company that he wanted to start, and then from that discussion over dinner, that led to him having an executive in residence position at Shasta, and that led him to recruit a co-founder, build a business plan or have a rough idea as to what the product was going to look like, and that led to a $1 million investment from us. Now the company has 350 customers. It's on its way to doing $15 million of contracted annual recurring revenue this year, and has raised in total $18 million. So we've been involved in all stages of investing in the company to date.
And when you make that decision to invest in a concept stage company, which very few investors do really these days, is it a requirement that you've had a long-term relationship with the investor, with the entrepreneur?
Yeah, I don't think it's a requirement. I think that, for example, if we did not know Evan as well as we would have, but we were still impressed with him and we got to know him, and we liked the idea, we might work with him or her as an EIR and get to know each other better. And the primary reason around this is when you're investing at an early stage and an entrepreneur is working at an early stage, the key criteria for whether the enterprise is going to be successful is finding product market fit. Yeah. And finding that discovery is not is a process that might take many different turns. And there might be some positive turns and there might be some negative turns in that process. And so to actually navigate that road in a constructive manner, trust is incredibly important, and understanding each other is incredibly important. Now, clearly that trust can be built over many years, but it can also be built in a shorter period of time, depending upon what both the entrepreneur and the venture capitalist is willing to invest in the relationship.
We focus a lot on that product market fit process. So our guidance to our entrepreneurs most of the time is to figure out that product market fit before going out to raise money, which is, the vast majority of the market is in that mode right now. So that's just an aside. So let's talk about in B2B, do you have sweet spots? Are there specific things that you are noticing or liking in what you're seeing? Let's say if you look at your last 18 months of deal flow, what kind of trends are you seeing, and what trends you think are going to be the genesis of major venture-funded companies?
Well, clearly, the areas that we are we're investigating, fall into, let's say, three broad categories within business to business. One, we're looking at security. The security is a very, very broad area. It impacts every enterprise's brand, every enterprise's ability to interact with their customers and their partners in a manner that is that respects that relationship from a confidentiality perspective. And the benefits of people finding ways around those security guards at scale is huge. So they might be doing it because they might be annoyed at a company and want to create a PR issue with the company. They might do it actually to make money. There's a lot of different reasons why people are, attacking large enterprises. And given the fact that the world is changing with cloud and mobile and new serverless technologies to build and run applications, the footprints of what needs to be done to secure the enterprise and live within the rules that are available, as well as live within them through compliance, as well as show that you've done what you've done properly and treated people with the appropriate level of respect, concern, and protect their information. There's a lot of opportunity in security, and one of my partners, Nitin Chopra, is focused in that area. Mm-hmm. Second, corporations are becoming more and more are moving to utilizing the data available for them to be a more data-driven organizations. And so there's a lot of opportunity in terms of understanding, pulling that data in one place, understanding that data, and converting that data into actionable intelligence that can drive decision-making and workflow to help companies achieve their business, adapt their businesses based upon data. So we spend a lot of time looking at both data infrastructure, data processing, smarts that are more, I would say, horizontal oriented. Mm-hmm. And lastly, in the application software world, we bifurcate that into two categories. We're looking for smart applications, applications that take information and help intelligently assist humans to drive better decision making and better workflow. We just made an investment in a company in Seattle called Zacharia, started by an Indian entrepreneur, grown up in the U.S., that's going after the procurement space and really looking at how do I build a smart procurement application to help companies ensure that they buy stuff that they've contracted with at the price that they've contracted with within the budget that they've set up in the year. And they're using smarts to make sure that that happens. And then the second area within software as a service that we're looking at is replacement markets. There's a whole host of automation that's happened, both mainframe as well as client server, and there's a huge opportunity to, as these applications get older and new capabilities are required within them, to go after replacing them. Some examples, obviously, that are very successful that most people know about is Salesforce is a replacement software for CRM, and they replaced Siebel and has built, close to a $100 billion market cap company around that replacement market opportunity. Workday is doing the same thing for human capital management, and ServiceNow is doing the same thing for help desk. So, there are more categories out there, and we're looking in those areas.
Okay. And could you take us through a bit of the thinking for your portfolio strategy in B2C, both trends that you're seeing as well as where your bets are?
Yeah, obviously, well, not obviously, they're always, every new communications platform yields huge new B2C companies. So with the internet, you ended up with Facebook. Mobile hasn't quite gotten there yet with, well, I guess you did have WhatsApp, which was a great acquisition by Google, and you had Instagram, which was a great acquisition by Facebook. So, those are mobile, camera-oriented, in Instagram's case. So we do look there, but they're hard to understand which ones will actually take off and which ones don't. So although they're a very good area for entrepreneurs to build businesses, we tend to be more conservative around backing those types of businesses because we aren't sure which ones will win. Okay, so that's an area that entrepreneurs should look at, but it's not an area within Shasta that we spend a lot of time in. Within Shasta and consumer, we're looking at three areas, very defined. We're looking at subscription-based businesses that are offering a product and service that people can subscribe to. We've made multiple investments in this area. Some examples are healthy, ready, prepared dog food that's delivered, called the Farmer's Dog. And they make human-like food and package it, customize it for the type of dog, and get it delivered to the house, and that's a premium subscription service. We have a contraceptive service for women called the Pill Club, where they can go consult a doctor online and get birth control delivered to them on a subscription service. And the third one that we've made recently is a company over the last couple of years called Imperfect Produce, which takes excess produce from grocery stores that don't look the way the grocer wants to present the food and deliver it to people on a weekly basis. So let's just say a carrot that's not perfect. It's not perfectly pink. or orange and has some blemishes on it might be put into the imperfect produce basket that someone subscribes to. So we are looking at subscription companies that, that fulfill a real need, that have the ability to have a high margin, that have an ability to have a brand, and that, that create real value for their customer. So that's one category. The second category that we're looking at is financial services, the new types of financial services. We have invested historically in companies like, including Mint, which was kind of a web-based quicken that helped you show you how much money you had to spend this month and manage your money better. We invested in an online banking company called Simple, which lets you set up a deposit account online and have mobile applications that help you do your basic banking in a better manner. And more recently, we've invested in a company called Tally, which lets you consolidate your credit card debt on your phone and bring down the cost that you might pay in terms of fees and interest. So we keep looking in that area for using technology to disrupt it, to disrupt the incumbents and find valuable consumer services that people would want. So that's the second area. And the third area that we're looking at is personalized medicine through genetics with a consumer bent to it. So we have small investment in a company called Color Genomics, and we look at other types of genetically oriented or DNA-based ways to customize medicine that can be delivered to the individual. So those are the three areas that we do in consumer.
Okay. And you didn't really say non-subscription e-commerce. Is that a correct observation, that you're not doing non-subscription e-commerce?
We do some non-subscription e-commerce, but it's not a focus area. So we have made investments in Stance, which is a branded company making socks and now getting into other categories. We've made an investment in a company called Poppin, a very large investment, which makes office furniture and office goods that actually are design friendly. So think of them as, I don't want to get IKEA, but I don't want to spend $50,000 for a desk. And I'm going to get something that looks nice, that fits my brand, that enables me to create a vibrant office without having to spend tens of thousands of dollars for each piece of furniture. There is, as it turns out, Poppin, although doesn't have a subscription, an official subscription component, when they land accounts and they equip an office, it usually leads to a lot of follow-on orders from the same customer as they might equip other offices or expand their use of their products within an office. The primary reason we like subscription businesses is the ability to create a long-term customer relationship, and the cost of actually acquiring any new customer is very expensive. And the key is, can you offer a good or service that the customer in a relationship that once you've acquired them, you deliver on it, and they keep buying more things through you. And by doing that, one in general is able to create more profitable businesses. Now, that does not need to be exclusively done through subscriptions, but it's easier to do it with a subscription.
Yeah. Well, one of my observations, and I was talking with somebody who operates in the Indian ecosystem with B2C e-commerce, is if you're doing a pure logistics play, even in niche e-commerce, I think it's getting harder and harder because Amazon is so comprehensive. The big categories are all taken. So the way to differentiate is with new products, branded products. And I think what you are layering onto that is the notion of repeat purchase and or subscription. So I think, for those of you in the audience who are listening to this conversation and you're thinking about e-commerce businesses, pay attention to these nuances because the baseline of e-commerce businesses is becoming tough. If you were talking about venture scale businesses, you can still do niche e-commerce businesses in smaller categories. If you can carve out a very small niche and create a $5 million, $10 million business. But if you're talking about building a $100 million, $200 million, $1 billion business, that opportunity, that set of opportunities that will lead to those kinds of businesses are fewer and far between unless you can differentiate with a product, a differentiated product or product line. Would you agree with that, Ravi?
Yeah, very much so. I do think that, also I think that one can look at different types of businesses. So you can look at something like Casper, okay, which is going after the mattress business and say, okay, here's a category that's large, that's not a subscription, but the user experience is so terrible with the incumbents, I can disrupt it. And maybe I can actually develop a better user experience, and I can do it at a better price because I'm going to optimize the supply chain in a way, and it's a big enough category that I can go and disrupt it. And so that can happen. Now, the next question is, how far can you go in that category before Amazon gets in? That's also another question. Maybe there might be some nuances in particular supply chains that lets you execute in that supply chain in a way that Amazon might not want to. Maybe the market size, the market for mattresses might not be big enough to deal with the complexity of the supply chain for mattress manufacturing. Might not fit
the mattress market actually has exploded. We have had several mattress case studies. Satva, which is a bootstrap company that has gone up to over $100 million, Purple, and so forth. So it's, yes, Casper found the opportunity and some others found the opportunity, but right now, for those of you who are in the early stages, this is not a category to look at because category is extremely overcrowded. It's a good example, a good proxy for the types of opportunities you're looking for. Now, what are the highlights of your portfolio? I think the last set of conversations I'd like to have is if you could give us a few examples rapidly and tell us what caught your attention about those companies. Why did you choose to invest in those? Ideally, where you went in early stage.
Yeah, so and when you mean highlights, you mean exits or companies that we're excited about that are sitting in
Doesn't matter. Either way is fine. Either way is fine. Something that you think very highly of is the highlight.
Well, I mean, I'll pick 3 or 4 software as a service companies and they're all multi-$100 million revenue companies. They're all growing north of 25%, and they're all valued at, by certain investors at over $1 billion, let's just say. And we invested in all 3 companies. In 2 of the 3 companies, we were the first institutional investor in, and the 3rd one, we were the second institutional investor in. And we invested in all of them before they had over $1 million of annual recurring revenue. So at early stages in all 3. So the first company is a company called Apptio. They've created a new category of business management called technology business management. And simply put, that is how do you manage the cost of IT in the enterprise? How do you treat IT as a business? How do you treat it as a service? Measure its cost, plan its cost, execute its cost. That didn't exist before Apptio got there, and they created a new category. They actually created a new business management practice, and through that created a $200 million plus business. They're a public company now, and they're worth $1.5 billion in the public markets, and they're traded on NASDAQ today. And
folks, those of you who are listening, the Apptio case study is on our blog, so you can go look it up.
And it was started by an Indian entrepreneur, Sunny Gupta, who's a multi-time entrepreneur, very successful. The second company is a company called Zuora, just recently went public, and they're a billing company, and the CEO recognized the power of subscription businesses 10 years ago, and that subscription businesses were going to be the way many enterprises were going to monetize their customer relationships, whether they were business-to-consumer businesses or business-to-business businesses. So, for example, Caterpillar, that makes large tractors, they actually make a lot of their money, and most of their money is in the service component after the tractor is bought. GE Aircraft, which makes big, large engines, a huge portion of their business is the aftermarket service that the airlines contract with them. And those are all subscription businesses. And he recognized this, and he created a whole new, economy. He went beyond just creating a business management practice and said, look, the world is moving to a subscription economy. And in order to move to a subscription economy, you need to have the right billing systems for that and the right financial systems for that, and I'm going to build that. And Zuora created that from the ground up. They're a multi-hundred-million-dollar company, and they're right now trading on, I think, the New York Stock Exchange with a $3 billion market cap on them. And it was started by Kim Zhu and KB Rao, a Chinese immigrant and an Indian immigrant. And KB was an immigrant himself. Teen was brought over here by his parents, like myself. I'm an immigrant, but I didn't actually emigrate. My parents just put me on the plane. And then the last company is a company called Anaplan. Anaplan is really taking Excel and put it in the cloud and put it at scale so businesses can plan better and really model any type of business problem, whether that's how do I do my financial plan for the year? How do I do my sales and territory quota management for the year? How do I do my workforce planning for the year? You can build all of that with Anaplan. And they've been growing very well, and they were at the company we invested in when they had less than $1 million worth of subscription revenue, and now they have lots of customers. You can go look up what they talk about themselves on their website. They are still a private company. And in all these three cases, you say what's common? Passionate entrepreneurs who had a unique insight into a customer problem, and that's key. And in all three cases, they had various degrees of product market fit. In Apptio's case, when we invested, they had talked to 15 enterprises, and all these enterprises had wanted the solution. And we could see a clear reason why the CIO needed the solution. And it made sense to us. Even though they had no customers, we could see why a CEO would buy, because the CIO was getting pressure that IT costs were increasing, and they needed to justify that IT cost spend to the other lines of business, to the CFO, the CEO, the general managers of their business. And there was another class of CIOs that really wanted to transform IT from managing hardware to actually providing services that their customers, the employees, were going to use, and really enable their customers, other employees, to understand what the cost of those services were and help the business make better decisions. We could see the logic in that, and we had the logic validated. With Zuora, we could see the rise of subscription services through SaaS, through services like Netflix, but frankly, I don't think we saw it as getting as big as it is today. But we knew that GE Aircraft had a business around services. And they had, at the time we invested, 20 to 25 customers. And Anaplan was going after an age-old problem. I'd actually worked in a company that, Hyperion, which built a financial planning system. And when I was in India in the early 90s, I built a modeling system similar to Anaplan, obviously not as sophisticated, for a large pharmaceutical company, Galicia. So I knew the benefits of being able to create multiple plans, have a platform that was sophisticated across different dimensionality. And the problem was that the technology wasn't available to truly deliver that flexibility at scale. And when we invested in Anaplan in 2010, we could see that the memory fabric of compute machines was big enough, and the technology was now available to actually deliver a very flexible planning solution. And the founders that were building it were building the same solution for the second or third time. They knew what they were doing. and they had an initial set of customers who loved the product. So in that case, we didn't need to validate the need as much as would it work. And we got early evidence that they had built a wildly successful product.
Very interesting. You know, audience, you just heard the investor perspective from Ravi about these three companies, Apptio, Zuora, and Anaplan. We have all three case studies on the Entrepreneur Journey series. You can hear the entrepreneur perspective there as well, and I would strongly encourage you to go check out those case studies just to get a feel for what their entrepreneur journeys have been like and how they have built these companies. Obviously, all three are unicorn companies and very successful companies. So, Ravi, that's great perspective on what you are looking for, and you know, I will re-emphasize for the audience what you just heard from Ravi about product market fit. You hear this from us all the time, that if you can get to successful product market fit, successful levels of repeatability, understanding that this is the logic of the business, and this is how you can repeat that logic, sell over and over again, and scale businesses at a fast pace. That is what investors are looking for. That is what Ravi is looking for. That is what Shasta is looking for. Is that a good summary of what you said, Ravi?
Yeah, absolutely. And it's a difficult journey finding product market fit, and
very difficult.
And it's something that it can be incredibly rewarding and incredibly frustrating. So it's hard.
Yeah. So, Ravi, thank you for sharing those perspectives. I know you have to run, but thank you for participating today, and we'll keep in touch, hopefully do some work together.
Thank you, Sumarna, for the opportunity and ability to share a little bit about Shasta and my thoughts. I really appreciate it.
Bye-bye. Folks, those of you who are going to pitch today, we're going to switch now to the entrepreneur mentoring session. A little bit of expectation setting here. This is a safe working session, so you can be completely open, honest, and discuss whatever it is that you need feedback on, you're struggling with, you need to remove roadblocks. I'll be happy to give you my perspective and my guidance on what would work in those scenarios. We are very experienced at this point in handling early stage roadblocks and how to steer around them. So that is the perspective that you will get here. It's okay if you disagree with my feedback. Mine is one kind of feedback. You can take it and think about it and decide how you want to play your hand. You know, one thing though you have to keep in mind is that not all businesses can raise money. Not all businesses should raise money. And raising money doesn't guarantee success. So we are going to start with Srini Kata from San Francisco Bay Area. Srini, please unmute your line and tell us what you're working on.
Thank you, Shramana, for having an opportunity to pitch here. And Social Chains is a decentralized social media ecosystem of verified and trusted users that's going to put an end to the massive fakeness currently existing in the social media. Next slide, please. Next slide, please. So what Social Chains is going to do is onboarding with the verified and trusted users. The users not only verified by their email ID, phone number, physical address, and also by government-issued photo ID with the facial recognition of their selfie with the photo ID. That way, every user that is onboarded is verified completely and creates a safe digital neighborhood. This is going to fix the massive fakeness problem that is existing. Next slide, please.
So, Srini, question. You're talking about creating a social media platform comparable to Facebook or LinkedIn?
It is better than that.
That's not the point. I'm just trying to understand what is the framework. Okay, go ahead.
And these are some of the statistics that are admitted by Facebook. More than 270 million users on Facebook are either duplicate or fake accounts. Next slide, please. And Facebook 10-year financials, if you look at it, the Facebook revenue and profits are growing up, and the backbone of social media, that is, user gets nothing out of it by participating in their platform. Next slide, please.
That's right.
Social media knows about the fakeness problem for a long time, but they cannot fix it because they're worried about losing the users if they ask them to verify without having any stake in the platform. Next slide, please. So the solution is a decentralized, user-driven social media ecosystem. Next slide, please. As I mentioned, users are verified, and you could ask me why users would verify with social chains. Because users have a stake in the platform growth and legitimacy of the platform and the trustworthiness of the platform. Next slide, please. Users are, honestly, we are paying the users with cryptocurrency for verifying themselves. So by joining this platform, users are awarded crypto tokens, and by contributing to the platform, users earn the points, and we have pre-mined about 1 billion tokens, out of which 60%, 600 million tokens will be distributed to the users. Next slide, please. And unlike any other platform that I mentioned, here users participate in the profit share. In the beginning, they will get 33% of the profit, and this profit share increases to 50% as the platform stabilizes. Next slide, please. And there's some select features I'm going to present here. By the way, this platform is in beta live, limited beta live in India as of May 28th. Next slide, please. So as I mentioned, users earn tokens, points, and profit share. One of the features is decentralized contact management. Users can not only bring their connections from other social media platforms, but doing so, they get also awarded with the tokens. And also, they could bring the contacts that they have. If, for example, if there's a small business, every one of us participate in economic activities since we get up and go to the bed. And we are making this platform not just a social and also a platform for economic activity and give an opportunity to the mainstream to make Internet of Money, which hasn't been possible as of today. Next slide, please. And businesses, on LinkedIn or on Facebook, people advertise and they have to take those leads or the clicks into the CRM systems and have to, massage the data. Here, the small businesses or any business can use the full suite of CRM that is available on the platform itself without leaving the platform. Next slide, please. The go-to-market strategy in 2018, we focused on English-speaking countries. We are live as of May 28th in India. And once we are working through the teething problems, and once we stabilize, we're going to roll the application in the United States, then UK, then Canada, Australia, and New Zealand. That's our go-to-market strategy because there is a higher propensity of user verification in these countries. And also, from the language barrier, we are just focusing on English. And we have recruited moderators, and these moderators bring in other users to come and join, for which they will be awarded with the tokens. Next slide, please. So it's all great, the social chain is going to share the profit, where they're going to generate the profit. From advertising, what's different from our advertisement is our platform supports permission marketing. Here, users are going to say what services they needed, what services they're interested, or products they're interested. We take that information and channel the service providers or product providers to those requirements. And because every user is verified, and also the decentralized contact management is going to provide targeted outbound marketing for small and medium businesses companies. And we are focused on platforms that are wrought with fraud.
One second, I have a question. So if you're talking about permission marketing in token-based system, a legitimate question that will come is, So if I am a user on your platform, I've chosen to put my contact base and get a chunk of tokens because of sharing my contact base into your platform. And am I then getting tokens for looking at advertising as well?
So as you said, users has a vested interest because beginning with 33% of profit goes to them. So obviously, the more advertisement platform success results in more profit, that means more profit goes to the user. So there is a natural relationship between the platform success and the user profitability share.
No, but that's not my question. My question, I don't have, as a user, I don't have a lot of control over the overall performance of the platform. But I do have control over what advertisements I see and what advertisement I don't see. If I choose to see an advertisement, am I getting compensated in tokens for viewing those advertisements?
No, it is not going to be a specific advertisement because you click on this advertisement, you get a particular share. No, this is from the total platform success. They share from the total platform success rather than individual clicking on an ad that is being proposed.
Okay.
And the other areas we are focusing is the platforms that are wrought with fraud. As you know, the romance fraud, in the United States, and more than 40% of millennials in the United States in 2007 filed fraud, greater than $400 with the FTC. That is the level of fraud. They've been defrauded. They have been defrauded by these platforms that are wrought with fraud. So because of the trusted and verified users, we are able to fix that problem because it's a safe digital neighborhood. People are what they're saying they are and not somebody else. So once we have that critical mass, we're going to solve the problems with the platforms that are wrought with fraud. This is going to be our revenue channels also, and we're going to be the app store for some of the legitimate dating services. For example, we are working with the True Jodi in India. That's a dating platform that is actually working with verified users, and we're going to use their platform in countries where there is no legitimate dating platform that we could bring on board. We may build in those countries. Next slide, please. This is the platform roadmap. As I mentioned, we are live in India as of May 28th. The green boxes are already built in, and the other yellow and red boxes will be built in the coming quarters. Next slide, please.
All right, let's go to your questions.
Questions, okay. Let me see what questions. I don't see any questions in the...
No, your questions. Here. What questions do you have for me?
Oh, sure. Yeah, definitely. The question is, I'm trying to raise money because this is not a platform. Facebook has taken $2.35 billion to come to a point until they went public. So I want your help in, putting a right message and reaching out to the angel and early investors so that. We have heavily invested in this platform. This came from bootstrapping, but we reached our limit and we needed funding. So my straightforward question is, how do we reach the angel or early investors? I know that VCs wants to see some more traction.
Everybody wants to see traction. In B2C deals, everybody wants to see some level of traction. So without some proof that people are actually interested in doing this, people are interested in uploading their contacts in exchange of tokens and so forth, angels are not going to engage. So you need to figure out how to bootstrap your way to some degree of proof of concept. If you do, then we do have the network of investors that we can bring you into. We're happy to help you think through more of it and work with you through the bootstrapping stage, but this is a company that is currently not in a fundable state. Unless you have personal relationships with people who are willing to do a friends and family round. That is all that is viable right now.
Yeah, that I'm working on. The second thing is, what is the level of traction that you would like to see before I come back to you?
I haven't thought about it, to be perfectly honest. I have to think about your business in way that can be sold to investors and figure out what is the repeatability that you can show, what is the logic you can draw from, and so forth. But I need to work on your business to be able to answer those questions and give you a real roadmap of how to bootstrap your way through this.
So how do I get in touch with?
I'm happy to do, but I can't do that right this minute.
I know, I get that. How do I get in touch with you after this call?
If you hang on for a bit, let me work with the others. I will explain to you exactly how to, very precisely how to work with 1Mby1M and me.
All right. Thank you, Susana.
You're very welcome. Martin Zacharia, you're up next. Is Martin on the call?
Hello?
Yes, go ahead.
Hello?
Yes, Martin, go ahead.
Hi, good morning. Good morning, Samara.
Good morning.
We are basically trying to solve a cribbing problem almost all the metros, which is basically the transportation or the commutation part of for the daily commute for the office going people. So we are coming out with a solution which is a marketplace for ride sharing. Since being a marketplace platform, we are a bit different than others on those existing players, and this is a new opportunity or the potential opportunity available in the market because of the time sharing possibilities. Smart assets or leased possibilities, and also the pure ride sharing as a solution. So Pooltoo is being
specific. So you're talking about within the city. You're talking about local transportation, yes?
Yeah, within the city and local both. Because within the city means it comes eventually local only, and spreading across all the Indian cities is the plan long term. At this point in time, we are operational in Delhi NCR majorly, and have done trial in Mumbai and Bangalore, Pune and Bangalore.
Okay.
So we launched in January 2018. We are running for the last 5 months now. We got around 25,000 app downloads and around 16,000 users.
Okay.
We are completing about daily around 200 to 250 rides matching which is coming up as of now. And actual transactions, we are paid transactions, we are doing in the tune of around 50 transactions per day, up to 50, depending on varies at this point in time.
And are you monetizing?
Yes. Out of these 225 rides which we are currently matching, we are having around up to 50 daily transactions which are paid transactions, and every transaction is monetizing. We charge around 20% of the for the platform charges. How are we different on a static perspective? We initially we started with carpooling and bike pooling, and also on a long-term perspective we have weekend rides and long distance travels as well. And also, since we are introducing this as a platform for ride sharing or time sharing, these private taxis or other taxis and long distance shuttle buses and kind of thing also will be eventually coming into this. Also, we have a model of travel host which is coming in, which is an Airbnb model kind of model for travel solution. So that is a long-term plan. So to start with, or to reach that perspective, we started it with carpooling and bike pooling, currently concentrating on corporate employees. So they have a fixed time slot available. Against that fixed time slot, we are giving the solution. How are we different in competition? The next, you can use the next slide. Next away. So there are people who are already available in the market. How are we different? And technology-wise, we are different, and we are almost at par with Wunder at this point in time. So Wunder is the only brand which is giving competition, and they have around 10 million install base across the globe currently, and they are not 100% monetizing in India. So we are the only one who started with 100% monetization facility, and also we share the revenue with the rider and the driver. So there is a new ecosystem which we are trying to create. So as of now, if you compare it with other Ola or Uber or any other pooling companies or sharing companies or taxi companies giving ride sharing, everywhere the rider will pay only, and the driver will earn. So here in what happens is there is a reverse pay mechanism. You use our platform for 30 days or 22 days for that matter, and on month end there is a payback for you. How that payback is working? Two models. One is referral model. Refer your family and friends. You earn one time. Plus every time they travel, you again still earn something on that. So this is one thing which we created, and we had created a custom algorithm for this purpose because it expands. Actually, it helps you to create your own custom community. So it becomes a community earning, and then your community grows, your earning grows, and this goes up to 2,000 INR per day to the extent. So you can say around $200 a day it can go up to, and on a 30-day volume it can go up to approximate 60,000 INR. So that is a kind of and this eventually it will come as a recurring income or a passive income regularly. So because of this reason, people won't leave this platform, because once this system started working and their earnings started coming in, because driver and rider both getting paid for that matter, and once that system comes into the place, because on an average per person spends say 10,000 grants, 10 grants a month for traveling. So he's still pay lesser than that on that. That's one part of it, and eventually he earns up to 60 grants kind of thing, which is eventually creating a passive income on the higher side. The lower side it can be anything between 15 to 20 grants. So eventually you are get into a loop where you will not be able to exit. The regular users will not be able to exit, and the average the particular class which we look forward is that mid-segment employees who are working in the age group of 22 to 35. So this actually creates a regular indirect passive earning opportunity for both rider and driver. And in a technology perspective, we had completed the product. Currently, we are fully running on Android. We have plans to expand into the market. And in comparison to the competition, we are at par with the technology. That's one thing. Aggregated earning model, which is our unique speciality, which we created. So paying back to the users is something different. Fully verified users.
I'm going to ask you some questions. I think we understand what you're doing and what you're trying to do. You have 25,000 odds, about 30,000 app downloads. What is your cost of app download? What is your cost of registered users? What is your cost of active users, transacting users? I think Martin's call is dropped. I'm not sure what your name is. There's somebody in the public chat who's disrupting a little bit. Somebody is presenting, we're dialoguing about strategy. Why don't you listen to what's happening here instead of, random comments? You're not a troll, you're just a lion who needs help unlocking his cage. You want full subscriptions, but you don't want to pay for it. These are not very constructive messages to put in the public chat in how you're introducing yourself. This is not very professional, right? Martin, are you back?
Samira, yeah, I'm back.
You dropped off. I was asking you when you dropped off, I don't know if you heard my question. I was asking you, what is the acquisition cost for app downloads, for registered users, for active users? What have you learned in the process of creating the metrics that you've created so far? What have you learned?
Okay. Okay. It's an interesting question and an experience. Our customer acquisition cost or user acquisition cost per user, it was coming around 200 INR, which you can say approximate 3 USD per user. Right
Okay.
now, because of that reason, because we were using digital platforms to use it, and that would give anything between 200 to 225 INR kind of thing, which is 3 to 3.5 USD or higher side, you can say 4 USD per user, which was the acquisition cost. That is where we actually innovated our internal referral model, which currently our acquisition cost is only 65 INR, which is exactly 1 USD per user. Which
and
is
the
a
65
fully
is, hold on, Martin. 65 for active users or 65 for registered users?
Our registered user.
Registered users, okay.
Fully
and
verified, fully verified.
What have you learned about converting registered users to active users?
So okay, in our scenario, because when we integrated this aggregated earning model, this binary solution, proprietary solution which we implemented, it becomes easy for us to convert a download to a registered user, because previously it was a download. Now it is a direct registered user. So we had already completed 2 steps of it. That's one thing. And second thing, the moment you registered means. The moment you registered means we are giving a cashback offer at the time of registration. That registration you are being given a cashback offer, and again you are getting along with your welcome kit. You are asked to invite your minimum 9 to 10 friends, and the moment those 10 friends registers, you get approximate 100 INR cashback, and again then it repeats, means every set of 9, 12. You get another 20, 30 kind of INR cashbacks is coming. So this eventually is creating a feeling for him to go back to the system every now and then. That's one thing, because every day your community grows and you are earning on it. Right now we are not talking about transactions. So what we want to do is we want to give a cashback offer on every transaction, which we had tested already, because all these scenarios we had tested for 1 week, and within 1 week we were able to get approximate 10,000 plus downloads within a span of 5 days. Okay. So what we offer here is now you install this app, register, refer your friends, start earning, put your rides and drives. On every completed successful transaction, you will get a cashback of say 20 rupees or 25 rupees. 25 INR. Okay, which comes around approximately $0.5, you can see. So that value is configurable, and the system is capable and intelligent enough to handle that. And we have built the capability in such a way that for a registered user who is registering on 7th of June, will get 150 days for a particular scheme. On every day he get 2 transactions, which he will get a cashback. So our minimum ticket size is currently it is 40. We have plans to increase it because of the changes in the environment and the fuel costs and other factors. So minimum ticket size is 40, which is for 10 kilometers. So out of this 40, 25 goes to the driver, which is 2.5 based on 2.5 INR per kilometer. And rest 15 rupees stay with the platform, and which we will give a percentage to the aggregated earning model to pump the network or the community growth factor, and rest we have the money. So what we offer here is you complete a transaction of minimum 40 INR, a rider and driver both will get 20 rupees cashback. So because of this cashback,
using the kinds of virality mechanisms that you are testing right now, at what point does your platform reach an inflection point?
After 24 months.
24 months?
Yes.
And so what is the target? In 24 months, what kind of numbers are you going to reach? How many registered, how many active users are you going to have in 24 months, given those assumptions?
Year one, we will have 1 million active users, 1 million downloads. which is expected to give approximate 0.5 million active users.
Okay. Then what about tier 2?
Daily approximate 5,000 to 6,000 daily transactions.
So, what is the revenue potential with that 1 million active, 1 million registered users in year 1? What is your revenue forecast?
So, I don't have figures right now on that. I have sent a detailed slide because it's got slides. If you can go over the next page, I can next slide. Can you just go ahead? I think you need to go back. Yes. So year 1, we will have with 1 million user base, we will have a revenue of 2.66. I know. Yeah.
What is the 2.66 crore, I see. And what is the funding required? 6 crore funding required to get to 2.6 crore in revenue.
Yes. Because this is the customer acquisition cost. So if you see the spending on it, my major money goes for marketing cost, user acquisition, and user retention. Because why I need, instead of spending this 200 rupees per user, if I spend 200 INR for 1 million user base, I'll end up in spending 20 million.
Okay, I got it. Okay, let's go to your questions. I understand what you're trying to do. What are your questions?
So the question is, we had already launched and running for 6 months. Also, we got an angel funding of approximate 120K, which we used for the product development and all. Right now, what we look forward is I need 1 million USD for the next year 1 marketing to acquire 1 million user base. We have a 3-year plan to acquire 10 million user base. And
so
this 10 million user base.
Your point of coming here is to seek financing, right?
Yes.
Okay. All right. So hang on. I've listened to what you're doing and everything. Hang on. I will explain how to use the 1 million by 1 million program for financing in a bit. Let me finish talking to the others, and then I will explain.
Okay.
All right. Okay, Susana, are you on the call?
Hello?
Susana? Yes, go ahead,
Hello?
Susana. Yep, go on.
Hello. Okay, so this is a slow fashion luxury brand. Okay, can we go to the next slide, please? Okay, so we are doing a smaller scale, limited edition, timeless pieces of the highest quality, and we focus on sustainable and ethical fashion. This started in 2003, so it's now 15 years that I've been bootstrapping. Okay, I have validation from the customers for 15 years. They love the product, they love the sense of it, and well, vision. We are really trying to create a leading global brand in the growing affordable luxury sector, and we also want to bring awareness about the devastating effects on the planet and the production chain of fast fashion. Industry overview, we have the customer 25, 55, upper class, get nomads, environmental conscious, and we want to start expansion in the US, West Coast. Up to now, Miss Monkey has been only selling in India, in a small boutique in Goa. Okay, so it's actually quite a big jump that I'm trying to do here. A little bit of overview on the market. Affordable luxury is growing. It's a $340 billion business, and percentage points 1 to 1.5 over the other sectors in fashion. This is important. Customers more and more expect that a business should serve society on an individual and collective level. research-efficient companies get higher investment returns, and companies with a strong ethical commitment have historically outperformed the average of the Standard & Poor's 500 and Galicia over the past 12 years. Next slide, please. Next slide. Okay, industry, financial perspective.
Susana, what is the current state of the business? You said you've been in business for 15 years. How much revenue do you make right now, annually?
Annually, it's about $12,000. The business is open only for 6 months a year. And actually, this place is like it's a very small fishing village with customers about 3 months a year. Now, what's happening is
so it is you have a store that you're selling through in this fishing village in Goa?
Yeah, that's it. But I've also started selling through a digital catalog, and basically what's happening is that this place where I'm selling in Goa, where I have the boutique, is not a high-end kind of tourist place, yeah? So the same piece that I'm selling in my shop for about $150, I'm selling now online for $840. So I'm having customers already paying this kind of prices for my products, for my clothes.
Okay. All right. So what is your question?
Yes. Well, there is more products. There is additional products. There is other lines. I'm also working on a cosmetic line. It has right now 26 products. It is a shamanic natural cosmetics line. Okay. The question is, of course, if you think this could be fundable.
I don't think it is fundable yet. You have not presented anything that makes me think that this company is yet fundable. You have a lot of work to do. There are a lot of, e-commerce as a category. I mean, you're going to have to do this. You have to build to a certain level with e-commerce, and then you can look at hybrid models of, stores and so forth after that. But you have a lot of work to do to get to the basics with which this brand can be fundable. Right now, it's not at a stage where it's fundable. I'm happy to help you figure out what those steps are, but as it stands, if you ask me to get this company funded right now, I cannot get it funded. You don't have what it takes to get it funded.
Okay. All right. Thank you.
Yeah.
So it's a strategy that we need, no? It's a strategy, and it's probably to have the platform already working, right? The e-commerce platform.
You need proper strategy that is compelling, and you need proof points against that strategy that investors can extrapolate from. Both of those are missing from your business at the moment.
Okay. All right.
Okay.
Thank you.
You can hang on. I will explain to you how to use the program to plug those gaps. So you can plug those gaps, but you're going to need to use the methodology to plug those gaps.
Sure. Okay. Very good. Thanks.
Okay. Yeah. All right. Uttam Panda, you're up next.
Yeah. Can you hear me?
Yes, we can hear you fine.
Yeah. So this is on the stage of development. We have not yet gone to the market. Okay. And we'll explain why we have not gone to the market. Okay. In the slides. Can you go next, please? Okay. See, this AIDoings, we are planning to build a solution which is based on education psychology. And if you go through this, the main concept is that we want to create a companion for the child, helping hand for the teacher, and a coordinator for the parents. If you see the current scenario in the education system in Pan-India, it is that all the three main stakeholders, the child, the teacher, and the parents, are working silos. Okay. So we want to create agent in between where we can combine together then and build a solution out of it. Okay. So this is where what are the missing dots? We are trying to join it and make a big solution. Okay. So the solution is what is going out with these components of the hardware, the software part. The hardware part we are already in the profit sharing mode. We have already tied up. Okay. Which I'll talk on the next slide, and how we are approached the market. Okay. Can you go to the next slide? Okay. So the problem areas which you find as itself as a parent out of which we try to build the solution. Especially in India, this solution is for basically India, because we find that India is a big market than other countries, in the sense that we have around 1.5 million schools, okay, around plus 2 million schools are getting added for the next 2 years. So that is how we are targeting for the pan India. Okay, the problem areas what we felt in the current education system is that it doesn't build any persona of a child. No critical analysis is done for child development. The teacher comes and just make a speech and go back. Okay, there is no defined way of how the child growth has to be. Parents work on silos in their jobs and don't care for the child sometimes. Okay, until they come that they're too late. So all these things we are trying to create a smart solution which will help to negate all these problems and make a betterment for the child and protect the whole education system. So can you go next slide, please? So okay, this is how the present scenario. Okay, so now if you see, the three people are though in the education system, but they work in a very different way and they don't talk with each other. The teacher talks to the student or the parents, to the parents on a parents meeting day, not on a daily basis. 1 year or 6 months is a big gap to have a discussion made. So this is how we are trying to create agent between each of the individuals, where the data will go automatically to each of the stakeholders, and we will create a bonded atmosphere within all the whole ecosystem. This is our thought process. Okay. Next slide. So this is how we are trying to approach. We are first going to be doing the advertising and educating the masses on what education psychology means and what it can help to the society of India. Okay, because we are targeting for India market currently. Then we are going to be educating the masses. Okay, by going on seminars, interacting with training sessions for the teachers, the parents, and the school management. Then we want to get the input from that, because we have already made a solution out of it, what the solution will be. We'll talk and try to integrate their pinpoints to our solution. And for that, we want to have a one-stop solution provided to them. It is something like the child steps into the school bus or steps into the school. From his steps out of the school and step into the home, we will monitor his daily activities, okay, his behavioral pattern, and how he does, because we will be providing a smartwatch. The cameras will be connected to do a face recognition of him and see the behavior aspect of the student on a daily thing, and we'll see how the child grows. Typical use cases of our solution which will help us in that, suppose a student is getting 100 in class 4, okay, in class 5 he gets 0 of the subject, okay, as fails. We want to pinpoint what was the reason behind it, okay, through our agencies. And because we are creating artificial intelligence through the whole ecosystem, and we know to create this intelligence into the system, it will take around 6 to 1 year, because for us, every child in the initial phase is one. After putting out some psychological questions, we will make it a one-to-one. Still, we make it a one-to-one interaction with the child, will not be able to succeed. And that is how all the ecosystem has been built around. And each child have a separate login. The parents have a login, and the teacher have a login. The school have itself an admin login. Okay. So then for that solution, we'll have the maintenance. That is how the approach is. Next slide, please. So this is a marketing strategy. Okay. We are going with the digital technology where the content, the social media, the emails, and the campaigning will be done in the initial 2-3 months, which we are planning to start by July 1st, okay, for the next 2 months, because that is where the summer vacation will start, finishing around July and August, where the session starts for all the big schools, okay, because the target audience for is A+ schools. Okay, next. Oh, so that is how the target customers will tell the school, the parent, student. Also, this will impact directly into stakeholders involved with students. Okay. So why we thought of the plan? The target market we saw it is around 1.5 million schools in that. So if you take out of that 10% of we can cover, then it is a huge amount of revenue and huge number of things. Okay. And what our feeling is that we will do for the A+ schools to start with, and we want to really go to the government schools where the future, where it was in a huge, great state in the independence era, and now the government schools are dying in India. So we want to go to that level after that. Next slide. So the pricing strategy is a one-time license you can pay, the annual license, and the package-based license. Yeah, because we have three packages on.
Is the school paying?
The school pays.
School pays,
per
okay.
Student. It's per student.
Have you validated this with the schools?
Yes, we did it.
How many schools have you talked
to? We have discussed around 3 schools because we are doing a study because to make it come around with all the data, everything takes around 3 to 4 months to make it up and running. So we have discussed with around 3 schools. They are very much interested with us, and they want to take the full.
How much are they willing to pay for something like this?
Per student, they are willing to pay around 5K.
Around?
Indian currency. 5K.
5K, 5,000 rupees.
Yes.
Per student.
Yes. And
okay.
in India, if you see Europe market, other market, it's a very small number, but for India market, typical the school size is around 8,000 students, which we are talking about. So 8,000 to 5K is a good amount of chance for us.
And so this is like a one-time fee?
No, it is annual.
Sorry?
It is per annual basis.
Per annum, okay.
Yes.
So
okay.
Per
because,
annum?
Per annum is 5K per student.
Per annum, 5K per student, okay. So you're obviously going to a category of schools that have some budget to buy technology and really willing to.
Yes, to be very frank, it is A+ schools of India, okay, where they can afford it, okay, and 5K per student per year doesn't.
How many of those are there?
If you talk about, it is around 1% of the total mass, you can tell, around 15.
How many schools? Tell me concrete numbers. How many schools are in your target audience of A+ schools?
1,500.
1,500. Okay, so that's the TAM that you're working with mostly.
Yes.
Because government schools will not have the budget. We are really working with the TAM of that. Okay, I got it.
Yeah,
I got it. So what are your questions for me?
The questions is because we are in a very primary stage of the crawling stage, you can say, and we want to know whether our approach to the market is correct or not, because initially the funding is from all of us, okay. So it is all because we all.
So I would recommend. Do you have a job currently?
Yes, I have a job.
You currently have a job. In that case, Uttam, I would suggest that you study the 1 million by 1 million methodology and map your project to the methodology and implement according to the methodology.
Okay.
Hold on to your job for a bit, because you have some learning to do in terms of methodology. And this is your first venture. So, and it's especially you have multiple people in the team. If all of you hold on to your jobs, do the venture on the side for a bit and do some methodology training and map your project to the methodology from a strategy point of view, I think your chances of success will be much higher.
Sure, so that is what we are planning also, okay, because we don't want to go to the market without anything. Okay? We are going on a step-by-step process. That is the feedback we want.
Great. So if you hang on for a moment, I'm actually the immediate next thing I'm going to do is explain to all of you, all 4 of you, and others in the room how to use the 1 million by 1 million program. So listen to that, and you can ask questions beyond that if you need to.
Yeah.
Okay. So folks, if you like what we are doing here in 1 million by 1 million, please bring serious entrepreneurs into the program. And look at that word serious, it's in bold, right? Building a company is a very, very big commitment over many years. You're signing off many years of your life to build on a vision, a dream, a mission. So you're going to be, the ones that succeed in our program, and I think the ones that succeed, period, are the ones that have a clear sense of that commitment, clear sense of what it takes. And there are some who are drawn to entrepreneurship because of the glamour, and those don't succeed. You really need to be committed to work really hard and really kind of do step-by-step building. So that's my overall guidance, and then I'm going to explain to you how to use the program. All our resources are at 1Mby1M.com, and the website is extremely comprehensive. So you should go spend a lot of time on the website to understand the program, and then if you decide that this is the right program for you, just sign up right away online, and you're all set. Let me explain to you how the program works a little bit. In terms of free resources, we have a terrific blog. So when we were doing the interview with Ravi earlier on, I mentioned a bunch of case studies. All that is available for free on the blog. So there's a tremendous number of case studies available on the blog. You're very welcome to study those and just learn from those. We also have the Entrepreneur Journeys book series, and there are 12 volumes of those. You can learn from the books as well, and these are case study-based books, 12 to 16 case studies per book. So these roundtables happen every week. We've done 400 roundtables, over 75,000 people have attended. So it's a very comprehensive program that has been going on for a long time, and you can continue to learn through these and listening to the recordings of these sessions. The full acceleration program is the 1 million by 1 million premium. And from that, you get extensive methodology guidance. We have a terrific curriculum. It's a proven methodology. And if you follow the methodology, we know that you will succeed. Your idea, the idea that you start with, may not be the idea that you eventually execute on. That idea may invalidate. But you as an entrepreneur will learn the methodology it takes to succeed. And if you zero in on an idea that does validate using our methodology and then implement it using our methodology, you will succeed. So that's kind of, the beauty of the program is we have created a methodology that does work, and that does work at a scale that has not been done before. So this is very interesting. You do have a level of hand-holding because of that methodology that will give you a significant leg up. So definitely start studying the curriculum as soon as possible by signing up for the program, whether it's basic or premium that you choose to sign up for. And then we do have all the introductions for customers, channel partners, investors, media, analysts, other advisors. We have a tremendous network. It's one of the most powerful networks in the technology industry in the world today. And you can snap right into that network by joining the premium program. And we do have private mentoring sessions like these roundtables, but they are members-only roundtables where we do the project-based coaching. Now, go to the 1M self-assessment page. That's where you will find a bunch of questions which are strategy questions. Every one of you needs to have a comprehensive strategy in place. And these are the questions that will help you develop that strategy. These are the kinds of questions investors tend to ask you. You should be asking those questions of your own self and your own business scenario and try to answer these questions. If you get stuck on any methodology points, use 1M Basic, which is our curriculum-only option, to plug those methodology gaps. This is going to involve basically studying through our online curriculum, video lectures and case studies, and it's a very powerful curriculum. If you just make a habit of intensely studying the curriculum, you will learn a lot and you will have a lot of your methodology gaps addressed. And if you follow this methodology, I am very confident that you are going to learn a lot and you're going to make great progress. So again, go back to the website and study the website, what to expect from premium, what to expect from basic. There are FAQs, video FAQs. It's, it's very comprehensive. There's a lot of description about the curriculum, etc. It is a case study-based program. We have over 800 successful entrepreneurs who have helped us build this methodology, and all their case studies are in the program. So you have video lectures, you have case studies, and that's how you learn. Our methodology is bootstrap first, raise money later, or not at all. You can also bootstrap all the way, and we are fine with that also. So that's pretty much it. We have 3 more roundtables in June. Sign up for to pitch or attend if you want a slot. I mean, today we are maxed out. I know so many of you were looking for slots today. Maureen will schedule you in the next 2-3 sessions and make sure that you have a chance to talk to me here. We also have in-person rendezvous in Menlo Park. If you're in Silicon Valley, if you're visiting Silicon Valley, either way, you're welcome to come to one of these rendezvous. Today there is one at 5 p.m. So that's it. And then right now we are at Q&A. So you're welcome to ask questions in your public chat, or you can also call in. The number is on your screen, 650-479-3208. Access code 669-942-822. Let us know in public chat if you're calling in. Amarish, I know you were trying to get a slot today. I'm very sorry we can't accommodate you today, but Maureen will make sure that you have a slot very soon in one of the upcoming sessions. And let me also introduce you to Irina Patterson. Any of you, any questions about the program, please contact Irina, and Irina will answer any questions you might have. But do so after studying the website. Almost no question that we receive is not answered on the website. If you look at the website FAQs, everything is answered. So you should be able to be quite self-sufficient without talking to anybody. But if you want to talk to Irina, you're very welcome to talk to Irina, and she'll be very happy to talk to you. Okay, folks, questions, very quickly. We are actually at the end of the session. It's 90 minutes done, 9:30 a.m. Pacific is when we try to close the session. But I will stay and answer your questions if you have any questions that you would like to be answered today. Anybody, questions? Questions, comments, quickly. All right, I don't see questions, so I'm going to wrap up because I'm also very booked back to back. I was traveling for a little while, and I'm back in California, and I'm absolutely booked right now. So let me see. Here's a question from Ivan Vitsik. Your question is, would I consider being on the advisory board of an accelerator? Ivan, we have an incubator in a box program for accelerators to work with us. If you follow that model, I would consider being on the advisory board of your accelerator, but if you're not following our model, then I would not. So what I would request you to do is to go to the website and look at the incubator in a box offering on the website. And if you have questions, contact Irina. She will work with you to answer all your questions. Again, all information is on the website. Look for Incubator in a Box, study the Incubator in a Box section of our website, and then we'll take it from there. Where are you based, Ivan? It's Ivan or Ivan. I don't know what you, how you go by, but what geography are you dialing from? Amarish is asking, why do you always encourage bootstrapping? I have an excellent product idea for which I have clients already. I just want money to implement. Amarish, if you go to the curriculum and study the curriculum, you will understand why I encourage bootstrapping, because over 99% of the businesses, even if you have clients, are not necessarily fundable. VCs are looking for hyper-fast growth, hyper-large-scale business opportunities. You have to go from 0 to $100 million in 5 to 7 years. Very few businesses qualify in that model. Just because you have clients doesn't mean that you're a good investment necessarily, or you qualify for investment. So I would recommend that you have a lot of methodology gaps. I can tell from your questions, you have a lot of methodology gaps. Please study and fill your methodology gaps. The best thing you can do for yourself as an entrepreneur is to study and plug your methodology gaps. Otherwise, you're going to go around reinventing the wheel over and over again, and that's completely unproductive. All right. I think I'm going to wrap up unless there are any other questions. Okay, well, we'll see you next week. Please come back, and anybody who wants to pitch and need a slot, register, and Maureen will get back to you with the slot. And Ivan, thank you for your input that you're calling from the Russian Federation. I strongly recommend that you look at Incubator in a Box. If you want to implement in Incubator in a Box, we'll work with you very readily, no problem. All right, talk to you soon, folks, and we'll get back next week with another session. And hopefully see some of you at least tonight at the rendezvous. Bye.